When they make a car in China and they send it here, we charge them 2.5%. Okay. So we get 2.5%, China gets 25%. That's not fair, that's not free, that's just stupid.
It's just stupid. Well, stupid or not, investors feeling the pain Monday as the Dow plunged almost 500 points before closing down 1.3% on those trade war fears. The Wilshire 5000 wiped out almost $500 billion in value due to that sell-off. Our next guest says the U.S. can inflict more pain on the Chinese than they can inflict on us. Let's bring in AEI resident scholar, that is, and China Global Investment Tracker author Derek Scissors. He's also the China Beige Book chief economist. Fair to say you know something about China. So thank you, Derek, so much for joining us. In a war like this, who wins, President Xi or President Trump?
Well, if you have to pick one, it would be President Trump. The more serious the trade conflict is, the more the U.S. wins. President Trump is right about that. China depends much more on the American market than we depend on the Chinese market. Having said that, we can make mistakes, we can hurt ourselves. It doesn't mean that, I don't agree with the president that it's easy to win a trade war. I just think if there's a trade war, we are going to win it.
But is the president, in your mind, going about it the right way? He's highlighted the inequality of the trade, the fact that it's not a level playing field. He's doing it in a very public way, and he's calling out the Chinese. And we know that saving public face is very important to the Chinese culture. Is this the way to do it?
Well, I know that argument very well, that you shouldn't criticize the Chinese in public. But the Obama administration, the Bush administration, the Clinton administration, they tried to work with China in private. And what we got is a bad trade partner. China is not a good trade partner for the United States. So President Trump is expressing frustration that many Americans feel, including those who follow China. We tried to talk to you in private. It didn't work. You don't like being humiliated in public, but you give us no choice.
Well, we just heard that the Chinese are going to impose a 25% tax on auto imports. That will add significantly to consumer costs here, as it will in other products once we get into this tariff war. I think many people agree with the president that it's not fair. But ultimately, do we, the consumers, end up losing?
Yeah, that's, I think, where the president can be criticized. He's identified a serious problem that we're overdue to take action on. But there's no reason to impose tariffs on goods coming into the United States and drive up prices for both consumers and American companies who use those goods in their own production. We can target Chinese firms much more precisely than that. We can take big Chinese firms like ZTE, which has been in the news recently, which are owned by the Chinese government, and we can say we're going to put those firms out of business. Not everything that's produced in China gets a tariff. Those firms are going to be targeted specifically. That's a better way to proceed than the way the administration is going so far. But
ultimately, do we bring China to the negotiating table on a substantial level? Can we really hash this out once all the tweets have gone back and forth and the statements? Ultimately, can we come to some sort of agreement that's equitable for everyone?
Well, this is tough because the Chinese have been getting away with doing whatever they want to do for a long time. They do steal American intellectual property. They do subsidize their own production and then expect us not to subsidize our production. And I don't want to subsidize our production. I want them to stop. So we have to get China to change. It's always difficult to get someone to negotiate changes when you're already doing the right thing and they're doing the wrong thing. I would say we can bring the Chinese to the negotiating table, but it's going to take a long time. And there's going to be a lot of uncertainty that the stock market and American consumers and American companies are going to have to face.
Yeah, and you know what? They're used to playing the long game. They got into the WTO back in, 2001, under this fanfare of a promise to open up the markets, their markets, and yet here we are, 17 years later, and I wouldn't say the Chinese markets are particularly open at all. Would you agree?
Yeah, I've said this before. Nobody cared what I thought back in 2001, but I thought it was a good idea to let China in the WTO. And now I don't think it's a good idea because they are not the partner we thought they were. We were negotiating with them back then in good faith. Maybe they were as well, and they changed their mind. Either way, we didn't get what we thought when we let China in the WTO, and that's part of the problem. You let someone into a club who doesn't believe in fair trade.
Yeah, and very quickly, Derek, does this get resolved in the U.S. favor, or at least a more equitable situation for the U.S.?
I think we get an improvement for the U.S., but I think it's a small improvement, and unfortunately, it's a very big problem. We take one step forward, but we've got 10 more to go after that.
All right. Well, got to start somewhere. Derek Scissors, thank you so much, Derek, for joining us. Much appreciated.